Last week wasn't about Tesla's stock going up. It was about something far more important. The way the market values Tesla has fundamentally changed. If you're a Tesla investor, this matters more than any single price move, because once the valuation framework shifts, short-term news stops working the way it used to. In this video, I want to walk you through what actually happened last week, why the news felt confusing on the surface, and why, from a higher level, everything suddenly makes sense. Let me be very clear up front. If you're still evaluating Tesla by questions like, how many cars did they sell this month? Or what happened to European deliveries? Then last week probably looked inconsistent, even irrational. But if you raise your perspective just one level, you'll see that last week's news was not contradictory at all. It was coherent, it was directional, and it was a signal. So let's start with the basic facts. In Europe, Tesla's EV sales were down roughly 40%. At the same time, headlines came out about an NHTSA investigation. Under the old Tesla narrative, this combination would normally hit the stock hard, but it didn't. The stock held up. In some cases, analysts even raised their price targets. And a lot of investors reacted with the same feeling. This doesn't make sense. But here's the key point. The market wasn't ignoring bad news, and it wasn't being irrational. What actually happened is much simpler. Our way of looking at Tesla hasn't fully updated yet. This brings us to a concept that doesn't get talked about enough: the valuation axis. A valuation axis is simply the gijun, the lens, the main framework investors use to judge a company. For years, Tesla was evaluated like an automaker. Deliveries, margins, growth rates, regional sales performance, and for a long time, that made sense. But last week marked a clear break. What the market is focused on now is not monthly delivery noise. It's AI, it's full self-driving, it's autonomy, and ultimately, it's Robotaxi. In other words, Tesla is no longer being priced primarily as a car company. It's being priced as a company building real-world AI. And one moment last week made that shift impossible to ignore. During a large-scale power outage in San Francisco, Waymo's Robotaxis stopped operating across the city. At the exact same time, Tesla vehicles running FSD continued driving normally. This wasn't a performance comparison, it was something deeper. It exposed a fundamental difference in philosophy. Waymo's system is designed for a highly structured world, high-definition maps, stable connectivity, fully functioning urban infrastructure. It's optimized for a clean, controlled environment. Tesla's approach is different. If signals fail, if connectivity drops, if the environment becomes messy, Tesla's system still looks at the world and makes decisions. In simple terms, Tesla is building autonomy for the world as it actually is, not the world as we wish it to be. And this is where the market quietly had an aha moment. Autonomy designed for a perfect system can stop easily. Autonomy designed for chaos tends to keep going. That difference doesn't matter much in demos, but it matters enormously at scale. Now keep that thought in mind because it connects directly to what happened next with FSD itself. And this is where the story starts to move from interesting to genuinely important for long-term investors. Now, this brings us to FSD itself. And this is where an unexpected insight emerged last week. A robotics expert described FSD V14 using a very specific phrase. He said it had passed what he called a physical Turing test. That might sound abstract, so let me translate it into plain language. It means the moment when a human sitting in the passenger seat stops consciously thinking, this is an AI driving. Not because it's perfect, not because it's flashy, but because it feels normal. That's a much higher bar than speed or smoothness. At that point, FSD stops being driver assistant software. It becomes an autonomous decision-making system in the real world. And here's the part many people miss. Tesla isn't solving this with software alone. When FSD struggled with sun glare, Tesla didn't just tweak the model. They filed hardware-related patents to address the physical problem itself. Most AI companies try to understand the world purely through data and algorithms. Tesla does something far rarer. They attack reality from both sides, software and hardware, AI and physics, and then they scale it through manufacturing. This combination is incredibly difficult to copy. Now let's zoom out and look at strategy. Last week, Tesla made two very different moves in Europe and China, and at first glance, they looked unrelated. In Europe, Tesla is quietly running FSD pilots in rural areas, not flashy cities, not viral demos, places where public transportation is weak, where mobility directly affects quality of life. The message isn't speed or novelty, it's usefulness. This technology helps people live normally. That's exactly how you earn regulatory trust in Europe. In China, the move was even quieter. Tesla China posted Robotaxi-related job listings. No announcements, no hype, but the roles focused on low-voltage systems, circuits, and board design. In other words, the nervous system of a robotaxi fleet. This wasn't research, it was preparation. And in China, companies don't talk until they're ready to move. Put these two regions together and a pattern appears. Europe is in the social acceptance phase. China is in the implementation preparation phase. Same technology, different stages, running in parallel. That's what a company preparing for global robotaxi deployment actually looks like. So why didn't the stock fall on bad news? Because the market wasn't looking at deliveries or investigations. It was looking at distance. Distance to scalable autonomy. Distance to robotaxi reality. Distance to real-world AI becoming infrastructure. When the valuation axis changes, old headlines become noise. Here's the long-term investor takeaway. Tesla is no longer just a company talking about the future. It's a company quietly entering society. And the most important question you can ask yourself is simple. Are you still valuing Tesla as a car company or as a company building intelligence that moves through the physical world? Your answer to that question changes how you see every headline and every price move. We tend to think the future arrives all at once. In reality, it arrives quietly, then suddenly it's everywhere. Last week didn't look dramatic, but in hindsight, it may be remembered as the week the market finally started looking at Tesla differently. If this perspective helped you see Tesla more clearly, take a moment to reflect on how you evaluate the company. And if you want calm, long-term analysis instead of daily noise, I'll see you in the next one. Thanks for watching. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.